So about a week ago, I brought in a mortgage professional to talk about 2-1 buy downs. Today, we're going to talk a little bit more about your typical buy down that happens more often. Kate Cook here with High Garden Real Estate. I'm joined by
Amy Robbins with Ruoff Mortgage.
So this rate buy down, like I said, might be used more for sellers, and we're going to I don't know, do a little bit of a role play where she's going to explain to me something like as if I am a seller and considering buying or considering selling my home. But we might get into a few instances just for educational purposes. Because before we were doing this video, this is just being completely transparent. She informed me of a lot of things, and I wish we were doing the video at that time. So, and also, I want to start off by saying that this is no actual quote or anything like that. We're not promising any interest rate or anything like that. These are all hypotheticals. Do you have to disclose anything with that?
Well, I'm glad you brought that up. So everybody has a custom interest rate. Interest rates are based off of credit score, loan program, loan amount of down payment. And so when people are looking at rates online, it's a hypothetical rate. So you really have to talk directly to your lender about your situation to have a custom interest rate.
Yes, and these are only my words, but I'll say that with my experience, I've seen and heard where people are promised rates online, and then once you get into the fine print and getting into the transaction, there's all these fees and things like that. So speak to a trusted professional whenever you're thinking of getting a mortgage. So all right, let's get into it. So let's just say I'm maybe a seller. I've been on the fence about maybe selling my home back in like 2019. I was like, all right, well, honey, maybe we should start thinking about selling our home. And this was actually kind of the case where we were doing that, and we were debating whether we should move or put up a fence and things like that. So we weren't really sure if we should sell, and this is a real life situation. We weren't really sure if we should sell because the market was so competitive. Mm-hmm. Luckily, though, staying in our home, we gained a tremendous amount of equity in our home. So what is something that you would probably advise me to do, or anybody to do, with the equity that they've gotten in their home, over the last two years of like a inflated market or whatever you want to call it,
Right.
What is something that you might want to suggest to somebody to do to overcome the interest rates that have gone up a little bit, which I think in the last week they've kind of slightly come down. So, but what is some advice that you might give?
Okay, so what we're talking about is it's called a permanent buy down. So you pay to buy down your interest rate. It's a one-time fee at closing, and the buyer or the seller can pay that. So what does it mean to buy down your interest rate? What does it mean to pay points? So let's say you're talking with a lender or bank and they quote that you're going to pay 1 discount point. So 1 point is 1% of your loan amount. And then it varies depending on what the market is doing, what the stock market is doing, and how far that's going to buy down your interest rate. That's a whole nother conversation.
Yeah.
But so, hypothetically, if you paid 1 point right now, your interest rate might be bought down 0.25%. So if we're looking at like a 6.75, this is hypothetical, might buy down your rate to like a 6.5%.
So like, let's say my home is roughly around $450,000, or I spoke to another realtor or whatever. They told me it was worth $450,000, and considering if I were to buy this is kind of a messed up scenario, but if I were buying another $450,000 home, and if I were to pay, like earlier in the spring, if I would have had to have paid like $500,000 for that home, mm-hmm. versus now paying maybe $425,000. What does that difference kind of look like in relation to the interest rates?
So as you mentioned, interest rates are fluctuating. They've gone up this year. They've trickled down a little bit in the last week. But let's say interest rates are like 2% higher than they were earlier this year. on a $450,000 or $425,000, your payment is going to be probably around $130 more a month on that.
Okay.
However, some things to think about, some of the things that buyers were having to do earlier this year and
like a
last
gap
year
appraisal.
were having to pay over appraised value. So they were having to bring extra cash to closing, and we're not seeing that as much in the market right now. It's not as competitive. You're not having to waive inspections.
Yeah,
So, there's a lot of
Yeah.
give and take with that, and rates still, if you're looking at the 30-year average, are still in line with where they should be. But you brought up another thing too, what to do with that equity.
Yeah.
And that's, one of my passions is sitting down with somebody and looking at their full financial picture.
Yeah.
We've got this equity. Should we roll it all over to the next house? We look at their financial plan. Maybe they need to start saving for their kids' 529s, their college education. Maybe they need to pay off some credit cards that have higher balances, so interest rates, higher interest rates. So we look at the whole financial plan and decide, okay, how much should we put down on the next house? And we look at buying down your interest rate. For example, I was working with a first-time home buyer that had an extra $2,000 to put down on their new house. And we talked about the savings of that $2,000, the extra $2,000 was only about $10 a month, $10 or $11 a month. And then we talked about it might be better to keep that money in the bank as an emergency fund, might need a snow shovel or
Okay.
so there's all sorts of things. We got to look at the whole picture.
Yeah. Just in my experience in dealing with the buyers and the sellers that I've had, I used to be very knowledgeable. I thought I was very knowledgeable when the market was, 2014, 15, and all that kind of stuff. It was a rule of thumb kind of thing where, you knew that if it was a $150,000 home, your payment was going to be about $1,000 a month. Now that's kind of changed. So, I've been doing this since 2013, 2012-ish. So now I don't even know. So I just pass them off to people like Amy. But yeah, if you are thinking about selling or buying, speak to a mortgage professional. You can speak to a realtor first, but you should eventually soon after talk to a mortgage professional just to get a financial picture. And one last thing I wanted to add was right now is a good time to buy and sell for this purpose. If you have a long buy cycle, that means if you like to do research and things like that whenever you buy something, right now is the time to be buying because you don't have to make a fast decision on what home you're going to be purchasing and things like that. And that is a real life thing. That's something I learned from Lucian and Associates coaching and training. Just how people buy. Not everybody wants to buy like that, and they like to do their research. So if that is you might want to consider getting into the market now if you've been on the fence like I hypothetically was. Was there anything else that you wanted to add?
I don't think so. Thanks, Kate. I appreciate the opportunity.
No problem. Yeah, so if you've been on the fence, give me a call, Kate Cook Realty, 317-697-7953, or you can call Amy or reach out to her at
317-339-2260. Amy Robbins. Yep.
You guys have a happy Thanksgiving, and we'll see you next time.